All right, welcome everybody. It's Ken here with Binary Pro Strategies. We're going to take a look at our weekly recap here, ending on October 23rd. Yeah, October 23rd of 2020. And before we get started, I want to talk about what does it take to be a successful trader. Everybody's heard it said that only 5% of traders actually make money. The other 95% lose money. And I think that's true. Maybe even be less than that. Maybe only 3% of people actually make money when it comes to trading. I know that sounds kind of depressing for a lot of people. A lot of people don't want to believe it. But it's actually good news. Let me tell you why that's good news. All you have to do is find out what the 3% of the people are doing. And it's very easy to find out what the 3% of the people are doing. You don't even have to talk to them. And the question may be, how are you going to do that? It's quite simple. Find out what the 97% of the people are doing, and just do the opposite. So most of you know that I'm not a big believer in indicators. And for those that are probably finding me on YouTube right now, take some time and do a little search. Look at all these traders out there, these services, these stock trading services, commodity trading services, Forex trading services, Bitcoin services, name them. Start looking at those and start watching what they're doing. And what is the one thing, or the majority of things you always see on their charts? Indicators, right? You see indicators. That is what the majority of people are using. They're using indicators. And what does that tell you? If you're going to be an indicator trader, you're not going to make any money. And I've been saying that from day one. People don't want to believe me. You know what? You go out and use an indicator, and then we'll talk in 2 or 3 months, and you let me know if you're making money with your indicator. You know, it wasn't always like that. In the beginning, when we didn't have the computers, people were drawing moving averages on charts, doing it by hand, doing the calculations by hand. Then they had an advantage because they were the 3 to 5% that were doing it. Nobody else was doing it. So yes, it worked. But now that's just the opposite. Everybody is using it. So what does that tell you? What is the other 3%, 5% of the people doing? Well, I know what they're doing. And what they're doing is they're using patterns. They're using what I call behavioral patterns. And that's what I use to trade. So you say, well, how are patterns any good? Well, first of all, patterns are probably the best predictor of what price is going to do than anything else out there. It is the closest to the current market price. And also, it gives us a clue into what people do, not only individually, but on a mass basis. All right? So let's talk about a scenario, because we all know this. This is just, if you just stop and think, it's just common sense. The question is, Ken, how can you predict what 80, 75, 80, 90% of the people are doing? I'm saying it's pretty easy to do that. You have to look at the situation, because people in a particular situation are always going to react the same way. Yeah, there may be 5% of the people, 10% of the people that aren't, but the majority of people are going to do it. Let's take a scenario. You've got a building, right? Go there, people were coming, people were going, it looks pretty much 50-50, right? You come back the next day, and all of a sudden there's a fire in the building. What do you think the odds of 95% of the people are going to be coming out of the building and not going into the building? It's going to be pretty high, right? That's what I'm talking about, all right? That's what I'm saying is human behavior under certain conditions are predictable. And that's what I show my students, is understanding what are those patterns. Okay, what are those situations that create people to do certain things under certain conditions? All right? It sounds so simple, and it really is extremely simple. And what I teach is extremely simple, but it works. And will it continue to work? It's always going to continue to work because people are always going to be predictable under certain situations. All right? So when it comes to looking for anything, I want you all to think about patterns. I'm not talking about head and shoulders. I'm not talking about trend lines, flags. I'm talking about price structures. Okay, I'm talking about what did the market do over the last 5 minutes, 10 minutes, 15 minutes, 20 minutes? Do you see anything there? Do you see a pattern developing in price? And there are so many patterns that people see them every day. It just doesn't register, okay, until you take a totally different view. You have to look at the markets and what markets don't usually do, not what markets are doing. You've got to change your mind around and say, because everybody's looking to say, God, what are markets doing? I just need to figure out what the market's doing. And then I've got it all figured out. No, figure out what the market doesn't do. Now you've got it figured out, okay? That's the key. That's the clue, okay? I'm giving you a clue. Find out what the market doesn't do, and that will help you find out what the market's going to do, all right? So that being said, let's take a look at a few things. Let's look at our stats for the week. Once again, pretty much what I would expect overall. Continues, the US yen, once again, as I mentioned last week, continues to be one of the strongest pairs that I have. And the beauty of tracking these what I call them naked stats. Basically what they are unfiltered setups, okay? Because we have certain filters that we use on these stats to improve our probabilities. But that being said, don't want you to get set into thinking, oh my God, I can't make money in an Aussie US on a Sunday night because there's only 57% probable. That is not the case, okay? My best day ever, and I've said this, if you watch any of my videos, best day I've ever had, I was only right 47%. And it was an incredible day, all right? So, and I've had days where I've had 90%. In fact, I've had nights where it was 100%, literally 100%, never lost on any trades. Wasn't near what I made on that day, where it was 47, because I sized properly, all right? There may have been an element of luck in there, but I was sizing based on what I knew. And that particular day, sizing, I was hitting it right at the right time and putting size on the right time and lightening up just at the right time. Okay? So, knowing that the US yen has been strong, the beauty of all this is that the reason it's so important to keep track of these stats is because when a pair, okay, at least for my set of patterns, tends to, once it gets strong, once I start seeing these probabilities come up, it gives me an indication of what pair I want to be trading, because they cycle, okay? They kind of cycle. And the beauty of it is when they start cycling, when things start shifting, they stay there. They can stay there for a year or two. It used to be, first year or two, US yen was my absolute favorite. And then it started shifting over to the Aussie and the Euro. And then I became a big fan of the Euro, so I was doing a lot of trading in the Euro. Now I'm beginning to see that shift again. It's come back over to the US yen. So I'm looking more and more and doing more trading on the US yen than I am on my Euro, okay? Euro is still good, all right? Aussie's still very good. Pound, I don't really trade that much unless it's an unusual, setup. But do very little in the pound. But nonetheless, okay, it's important. You have to know this. You have to keep track of your trades, and I stress this over and over again. Folks, if you want to be a successful trader, you have to use what I call the right tools. For me, it's patterns. 2, you need to keep track of every trade, even if you're not making the trade, okay? Even if you're not taking a particular setup, you need to keep track of it, because guess what? It's going to have its own set of patterns, right? All right? Things are not random. Okay, we know this from chaos theory, right? What we consider to be chaos is actually organized, okay? There are some factors that are non-random in chaos, all right? And if you're not familiar with chaos theory, probably be a good idea to go back there and take a look at chaos theory. Also, things can be predictable as well. On my webpage, you go to my webpage, I wrote an article back in I think it was 1985. I wrote an article back in 1985. I just discovered something that to this day continues to work. And I compared the markets to a hologram. And the markets are just like a hologram. And I'll explain that. And I provided some predictions for the magazine. And sure enough, the prediction was right on target. You can see that article. Just go, you go to the website, binaryprostrategies.com, go to About Us, and you'll see an underlined little phrase that says the holographic market. Click on that. You'll see a cover of the magazine. Click on that, and you can read the article. All right? Absolutely. So the things are, the market for many, seems to be random, but there's a lot of unrandomness to it. All right? And that is absolutely a fact. No doubt about it. Okay? So, and once you see it, then you believe it. And a lot of times people have to see it to believe it. But I promise you, when my students see it, they do believe it. All right? Because it does have non-randomness to it, particularly behavioral patterns. All right? So that being said, not a bad week overall on the stats. Great first trade of the day. In this whole week, my very first trade out of the gate. What an awesome week. Not only in the morning, but at night. So happy on that. Once again, first trade means whichever of these four pairs come up. And this is unfiltered, folks. This is not, I'm not filtering out saying, okay, I see one on the Aussie, but I'm not going to take them. I'm going to wait for the Euro to show a little bit better setup. So I'm going to go ahead and take that Euro and I'm going to filter it out. Nope. If the Aussie pops up as a naked stat, no filtration, that's what I'm taking. And that's what I'm showing here. Okay. And you will be amazed. I mean, my students that are in the chat room every day are amazed on the accuracy of the first trade. I don't understand why it works that way. It just does. I can tell you overall that the markets are better to trade in the morning. The first 2 hours, that's when you're going to make your money. And I'm going to talk about this last Friday. Friday, I did not have a good day, and I'm going to show you these numbers here in a little bit. And Fridays are kind of a tough day anyway, but I started off just awesome, and then I ended up giving it back. But nonetheless, the thing is that first trade of the day, first 2 hours of the day are absolutely awesome. That's when you're going to make the majority of your money. If you can be disciplined enough to stop trading after the first 2 hours and wait till later in the afternoon or come in the evening and trade, that is going to be where you're going to be successful. And that's why I say, come in with an objective. Set an objective, 50, 100, 200, 1,000, whatever it is. Go to make that objective within that 2 hour time frame. If you don't make it, you stop. You come back the next day and you do the same thing. All right? That's the key. You got to come in with an objective, and you have to have a cutoff point because yes, it can go all day long. It can be an awesome market all day long, but that's not usual. All right? That's unusual. All right? So 85% of the time, that's not going to be the case. The case is going to be hot in the morning, pretty choppy, dead into the afternoon, and then things pick up right before Natick shuts down, and then, of course, they reopen. They shut down for an hour or so. But then later in the evening, things pick up, sometime usually after 8 p.m. Eastern time. So that being said, if you're trading Natix, other thing you got to understand is opportunities. There's certain times when things are better than others, all right? All the things that I teach in my core package. But nonetheless, let's take a look and see what the crystal ball, the CB did, all right? I mean, not a bad week. I mean, I was right on, expectations of what I expected to make. But look at Friday, down 1,100. You know, folks, I was actually up. I mean, right out of the gate on Friday, I thought I was just going to kill it all day. Because every once in a while you have those Fridays. The Friday before was a really, really good day for me. The Friday before, not too good, but I still came out green. So I think a lot of this had to do with me getting a little probably over aggressive on Friday. I was sizing up I sized up. I don't think that where I put my size was wrong. I think I sized up when I needed to size up. It's just that I was sizing up too late into the afternoon or too late in the morning because I started the day green, and then what happened is it just started to go south. And I should have stopped trading, but I kept trading, and when I knew I shouldn't have, look, we're all guilty of it. I'm going on 40 years of trading, and sometimes you just think about, man, I just been hitting this thing every day. I know I'm going to get this back. And sometimes you just don't, all right? You don't overanalyze it. The only thing you can say is, did you do what you were supposed to do? Did you trade like you're supposed to trade? Did you size when you saw size? If the answer is yes, you did everything right. The question is, did you trade too long into the day? Okay, when you knew things were not good, that's where I messed up. Okay, because I saw it going south, knew it was a Friday. We talked about it. Some of my students walked out, had a nice Friday, made money. I just kept trading at it, and that was my error. Didn't have a whole lot of great CB setups. Markets were extremely choppy. Didn't have the follow through I expected. Blah blah blah. But no, the bottom line is, it gets down to me. All right. Am I going to beat myself up over it? No. And that's the thing, guys. This is a probability game. All right. Let's say you're trading like, you look at the night on the Aussie US and you say 83% winners. Okay, 83. Now I want you to think about this for a minute. 83% winners. All right, so 10 trades. Are you only gonna be wrong 2 times out of 10 trades? No, that doesn't mean that at all. Think about it, folks. We're talking about day after day after day. It may be 83% today, it could be 60% tomorrow, and the next day it could be 95%. It averages out. All right. We're talking about larger numbers here, folks. We're talking about, you're looking at, Morning said, you're looking at, probably, I think we're in the 60, 70 trades a week. I think prepare something like that. That's over 60, 70%. All right. I mean, look at this day. I mean, you're hitting at 80% at night, 82%, 88. Okay. And then you come over here and say, ooh, 44%. That's not too good. But then you look at the next day, 50%. But now look at that, 82%, 89% in the morning. You see what I'm saying? So just because you're trading probabilities, I put out probabilities to show you how accurate it is just as a naked stat. But folks, you still have to trade, because it doesn't mean that if it's been 83% over the last year, that you're going to have a day where every 10 trades you make, you're only going to lose 2. That doesn't make sense. You could lose 5, 6 in a row. Hopefully that's not the case, but that can happen. All right, we're dealing with probabilities. It doesn't mean that things are broken. Everything you've got to look in. You got to look at the market is, are you going to be a hobbyist? Are you trading for just try to make money today and you're done? Or are you looking over the long term? If you're looking over long term, you're going to be making thousands of trades, okay? Thousands of trades. And you've got to train yourself to say, okay, so I had a loss. I had a couple losses. Oh, it wasn't a good day. But I've got a lot of days in front of me. I have a lot of trading opportunities in front of me, right? Losses are going to be opportunities because the market does cycle too. Good days are usually followed by not so good days, sometimes bad days. And then bad days are usually followed by really good days. I talk about this a lot. If it's choppy in the morning, it's going to be awesome at night. When it gets choppy in the morning, I know I'm going to have a great night. Look at this particular, what was this? Thursday night, Aussie, 57%, yuck. 100% that night. It was just on fire, all right? That is look at that, 59% over here in the yen. What happened at night? 82%, okay? Understanding all of that gives you a huge edge in the market, all right? So if you're the kind of guy that said, okay, I'm just going to track it. I'm just going to see. I'm going to wait till things are not so good in the morning, but I'm going to come in at night. I'm telling you, there's so much you can do. There's so many things you can do. Or you could trade in the morning and say, you know what? It wasn't great. That means I can get a little bit more aggressive tonight because I know my probabilities are that I'm going to have a really, really good night, all right? A lot of things you can do. The key here is sizing, obviously, but knowing where your opportunities are, the time, what are your results up to this point, the patterns within the patterns on the results, right? I mean, if I have a loss, what is the probability that the next trade is going to be a loss based on this particular pattern, right? Just like the burning building, right? So you go to one burning building, you can see, 100% of the people run out of the building. You can go to the next building, and it doesn't mean it's going to be 100%, okay? It may not be 100%. It may not be that big of a fire, all right? But it's still predictable, right? It's still predictable. So the thing is that that if you look at enough sample size, you look at enough burning buildings, you still know that the probability is, 95 to 100% of the people are probably going to be running out of that building. Okay, and that's the key. So you don't look at just one building, you have to look at a lot of different scenarios. So don't get too hung up on the stats, okay? But the thing is that you can use your losses and your wins as a way of gauging when to add size. And it doesn't make sense to do with indicators because there's no predictability there. Trust me, I've looked at it. There's nothing there with indicators, but there are with behavioral patterns. All right? So anyway, that being said, go read my article on the holographic market on my website, binaryprostrategies.com. Please give me a like. Please subscribe so I can keep this channel going. Also, if you have any questions, you go to binaryprostrategies.com. You can contact me, ask me some questions. If you're not clear on anything, I'd be glad to answer your questions. That being said, everybody have a great week, and we will be back next week with our next weekly update. Everybody have a great trading week. Take care.